The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days, today being the 22nd of June. Wow, time flies. So now we're almost 3/4 of the way through June. We've just got a little bit to go. Very interesting with the whole Greek scenario. Let's just go through the numbers. Let me move this away. We're looking at a 10-minute chart. You've gone to a peak D at 2120.50 in the E-minis. Looks like it's going to try to tackle that high right as we speak. And let's just go through the numbers. Yep, there it is. Pop. Went through 2120.75. This is really a fascinating period for a number of reasons. The most important being, and let me just show you this chart right here. Let's just do the daily. So we're looking at the E-mini up 23. So over the weekend, there was some good news coming out that maybe, I don't know what the good news was, actually, that Greece was still a country. I don't know what it was. And, but basically it was interpreted as being really good news, that there should be something brought to the table, etc. I don't really care. I do care about the response to the market. And the market response has been very positive. Dow is up 157 at 18,173. Let me just do this at the same time. So you've got the E-minis. It has to go to 2126.25 to break out to a new all-time high. Leg C, it's gray leg C in the daily chart. Leg E was at that 2126.25 level. It could go to a modest peak F here or an extension. I don't think it's a brand new leg to the upside A. We'll deal with that. And the 120-minute chart has got a leg C, E/C. So let's just go, because I already want to get to the other indices. Move that away. Here we go. Dow, INDU. The Dow is right now at 18,168, up 152. What does that do? Well, you know that the high on Thursday was 18,174.73, and we're at 18,173.20 as a high today. 2 points, and we're up and away into leg B, gray B still. In other words, the rally that's unfolding has so far quite good technicals. Stochastic at 71%, but rallying. MACD has crossed very strongly positive. And what's really important is that Chapman Wave 2-bar reversal on the 19th of May at 18,351 in the very next session at a high of 18,350, that is still the area to tackle. So I'll go through the scenario in a moment, but let's just first get numbers down, because it's the beginning of the week, and we really want to start off in a way that says these are the parameters that are quite clear, and if they don't get pierced either to the upside or the downside, we're just stuck in a trading range. But the upside is emphatically just 200 points away. A Dow in the 18,352 area starts a new recovery high, and I have to consider that that is possibly an alternate wave count in the weekly, maybe F/C. But we'll deal with that by just saying a new all-time high will be very positive for the monthly chart, especially with just a week to go. But of course, with news like this, you could have, Tom gave a really good analysis earlier on, the kind of summation of what he's looking at based on his volume figures. And absolutely, this is price. This is not just the technicals. Price is determining the move. But at the same time, as soon as that starts to fail, then you've got to anticipate that the technicals are going to predominate. And what does that mean? It means that the MACD and stochastic in the weekly chart of the Dow are still very, 48% in the stochastic. And here we are 200 points away from an all-time high. Either that's incredibly positive, because you're still going to see the stochastic get back to 80%, another 33% higher, which is going to translate to at least another 700 or 800 points in the market. So I have to look at this and say, let's just do the analysis. The surprise factor at this point could still be just a sudden rug pull to the downside. But hey, big deal. We've had rug pulls to the upside. On Friday, we had a rug pull to the downside. We're just stuck in a trading range at this point. The weekly chart of the Dow shows it. All-time high 18,288 on the 16th of week of the 16th of March. Pulls back, holds the 17,570s very nicely. Rallies to a new all-time high at 18,351. Pulls back and makes a higher low bar of 17,000. What was that? 698. Yeah, 698 on the week of the 19th. That's last week. All of a sudden, you're looking at the chance you can make slightly higher highs and slightly lower higher lows. Unless, and this is just absolutely clear, within a week from today, if there is a reversal based on, I don't care what it's based on, maybe it's the Greek fiasco, but if it's based on the price movement, that will not be a failure unless we're trading at 18,171, unless you really take out decisively the 17,800 support. You just have to smash through that and then go to the 200-period moving average of 17,643. This is the beginning of the week. So let me do the same thing on the S&P. Now, for my subscribers, we're almost out of all the shorts, but we did add just tiny positions this morning based on the surprise factor. I've got a trend line resistance in the S&P. Goes right to exactly where we are right now in the daily chart. I've got the A, B, C, D, E in the 120-minute chart. At E's, you got to expect there could be something that reverses at least for a while. So all the little patterns that we're looking at are suggesting that if there is a sudden move to the downside and the volatility index, we're trading right now at 1253, holding the 1250s, if that just gets taken out and obliterated so that the 12 support completely goes, this market will move higher. Greek, what would be the expression? Greek schmeek, it doesn't matter. We're going higher. I say price is the arbiter of the trend. The technicals are already confirming or non-confirming, but it's the way the price is acting. So if the S&P at 2128, up 18.93, suddenly spirals not just to 2134.73 to make a modest 1 penny new all-time high, but actually closes any particular day in the 2137 to 2139 or higher area, I just have to consider that the buying pressure is going to continue, at least for now, until that surprise to the downside comes. So, okay, parameters, I spoke about the upside. On the downside, I would just make it real simple. It's at 2128, a close below 2103. Any surprise, that starts the downside activity because you'll be under the 9-period moving average of the weekly once again. Let's just keep it simple. Now I'm going to go to the comp index. No, I'm going to go to the QQQs. Most people look at the Qs. Now, this is very interesting. The Q high today is 110.95. And what I'd say to subscribers is that a move above 110.88, it would start a leg C, but it's 111.16 that needs to be taken out because at 111.17, you've broken to recovery highs. And that's going to be important. Why? Because it actually starts leg D up in the weekly chart of the QQQ series, Power Shares QQQ Trust series, up $1.03 at 110.93. And the 120-minute chart just broke out again, so maybe that's an F slash something. Oh, it could be an F slash B. We'll just treat it as an F for now and see what happens. F, there it is. All right. So the parameters there, I gave you the upside, downside, 109.60. A close below 109.60 says, okay, no big deal, but you got to be careful. If there's a close below 109.60, and then the very next bar, that's the next session, goes below 108.50, all of a sudden you've got a pattern that says, watch out. That weekly chart with a negative MACD and negative stochastic is a warning to say this move is not real. It's not based on great fundamentals. But we'll just deal with that one step at a time. And I'm going to now go to, this is fascinating for me, IWM. IWM made a leg F/C on peak on Friday. On Friday. And today's gone to a D, to a new, is that an all-time high? Yep, a new all-time high for this index. And the weekly chart is G/C. So, and the technicals are fabulous in the daily, kind of okay in the monthly. Price is spectacular, but the MACD hasn't yet turned up. If it does turn up from here, maybe other things are going to happen. But that cup formation in the weekly with the MACD weaker than it was back at the high of 127.13 back in, I think it was April, and the stochastic at 83%, but really having that swoop to the upside with on-balance volume. I said, just be real careful. Everything's looking okay, but just don't turn down below 126.90. Certainly 126.30 starts potential failure pattern. So those are parameters for the IWM, acting well right as we speak. Now, I showed this to my subscribers on my opening call this weekend. I showed them the spectacular move of IWC. So I'm going to just talk about that for one brief moment before we run out of time. So it's the IWC. I'm going to come back to that. It's the iShares, the microcap ETF at all-time highs as we speak. And it is gapped up into a leg G/C with a fabulous MACD, stochastic at 92%, a little bit bumpy, but there. And the weekly chart with the daily has hit this trend line resistance right there. Look at that trend line resistance and dashed line. And the weekly chart has quite a way to go to the next level, which is in the 85 area. So 84, I said to subscribers, 84s to 85, just in the low 85s is going to be really strong resistance for the IWC. The iShares microcap ETF at 83.76, up 44 cents. And leg E in the, I'm calling it leg E in the monthly chart because that's what it looks like. Okay, so now let's do this. Gold. Gold is trading at this particular point. It's down $15 at 11.86. It's making that H pattern failure. Remember, I've been speaking about this. I drew the trend line. It went a little higher than I expected. No, it went quite a bit higher than it had that spectacular 25, 26-point rally the other day. And now it's giving it back. And I said, I just don't see anything yet in gold. Maybe I'm wrong, but I see H pattern, lowercase h in the Chapman wave methodology that suggests there is weakness. And the SI, the silver chart, is very similar to that. It's really weaker than the GLD at this particular point. So I don't really see anything. And if you look at the copper was pulling back at a quick request for the index while I'm there. Oh, you know, I haven't. The index is exactly the same as the QQQ. Look, keep an eye on this chart, both the daily, weekly, monthly. Now watch this. Exactly the same chart. QQQ series leg C, I told you, it needs to get above 111.16. So the dollar is really something we need to look at. Is down 13 cents. I'll be back. Basil Chapman, Tiger Technicians Hour.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and I just had a question about the EE Mini 10-minute chart that I have. It's called the naked chart. There's only one. Oh, wait, it's just, yep, I don't have any MACD or stochastic on it. I do have the 200-period moving average and 9-period moving average. So this is the cup. It went straight to, it had this big rally to 21.18, round number high at 4:30 this morning, and then 3 bars or 3 10-minute bars that stalled at that high. And then it pulled back very sharply, went to a trough D, and then it made a cup formation. I chose, when I was doing my analysis, I use a particular candle. If I can't get the left side, right side exact because it's already moved too far to the right, I use another candle, and that gave me a left side, right side price time move that said it should pierce 21.18 at about 10 minutes past 10. That's exactly with the Chapman Wave inside wedge technique, where it went right through, and it went right through to the point where it went to a leg C and it went pull back to retest the lip, the breakout. That's the characteristic of the Chapman Wave inside wedge, is that if you make a cup and ladle breakout, cup and ladle is different to a cup and handle. Cup and ladle says you test the left side high and then you just immediately go right through it. You can go even higher, but be careful because you could come back, except that there's a little difference here. In the time frame that we did it in exactly the right time frame. So that means that you've got a little bit of a handle here because it pulled back after the C, pulled back and then broke out again. And that says that we've made a leg E, and that the high that we just made at 21.22.00, another round number high. We're going to watch this one carefully, because if I was looking at this with the technicals, I bet that this rally is seeing weaker stochastic or MACD. One of them, my guess is that it's not the MACD, it's the stochastic. How about, let me just see if I've got one ready here. E-mini, there it is, okay. And yeah, we've gone to an E. That's very interesting. All right, MACD is still very strong. Stochastic is the one that's a little bit weaker, but it's not really very weak. It's at 89%. So this says that there's still some residual strength. And we're watching this closely. Why? Because it'll take time and price. I'm talking about a 10-minute chart, right? So time and price means that it could be 20 to 30 minutes. By the end of my show, we should see exactly what's happening. Why? Because at 21.20.75, if it was to break under 21.16 in the next 30 to 45 minutes, that'll say, hey, short-term top could become an intermediate top. In what? In the 10-minute chart, remember, because the 120-minute chart is still looking quite good. So let's get out of that. We come right back to where? We come back to currencies. I'm looking at the dollar DXY. This is the currency. Oh, I just did it incorrectly. I have to get used to something new here. It's taken me quite a while to get used to it. All right, the dollar's at 94.02. It's down 7 cents. And what is really important at this particular time is this is the dollar index. What I'm looking at here is that there's been a rally which looks very much like an H pattern in the 120-minute chart, making another H pattern. I think that the dollar is trapped for now in a smaller trading range than it had been before, just for the moment. It's kind of on a wait and see, but absolutely, if it closes decisively under 93, I remember saying that last week, a close below 93 changes the scenario quite significantly. So let's watch that. And on the upside, a close above this trend line here. It's not 100%. I'd like it right there. Okay, that's fine. A close above 95.30. And it's trading at 93.98 right now. So it's quite a move. 95.30 says, hey, dollar is active now for a rally, but the weekly chart suggests that the left side low bar, that 93.13 level made on the week of the 15th of May, that's the one we got to watch real closely. So now let's look at the EUR-USD. That's the euro currency pair. And we're looking at a D that was made in the euro currency pair right there, underneath the previous high. It's fascinating that it took all this time and all this effort, and all it could do was to go have a full count of an A, peak A, a peak B, a peak C, a peak D, and now it's trying to test that peak D, and that the weekly chart that I drawn in some time ago with those arch formations continues to have the arch formation. Let's look at the parameters. If the euro-US dollar currency pair starts to trade in the 1.150 to 1.151 area and holds there, that would suggest that the weekly chart is making a much larger arch formation. It's very positive. Stochastic is at 85%. MACD is good, not great. Now let's go to the USD JPY, because earlier on when I was looking at it, it was just testing a support level, and I believe that is, I just want to check it because I changed some things. Yeah, 32-period exponential moving average, it tested it. It's trying to make an H pattern that looks like it could be a successful one if the euro-dollar currency pair at 123.29 can actually rally to 123.80 in the next 2 days. That'll be a positive. Breakdown into the 122 is not good. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Basil Chapman, we're back. Dow's up 158, S&P's up 19. So I'm really suspicious of this move right now. My bias would really be to be a little bit more negative. We have actually just one short position now. The other one, I had just a very tight stop and it got stopped out. And I said to get just a small position. It was more a trade than anything else. And I'm thinking here that, well, we have one long position that is up really well over the last couple of days since we got it. It's up about 11% or so. But I'm looking at this and I'm suggesting that something's fishy about this move. There's just, I don't trust it. Normally, my instincts, I kind of would trust my instincts, and my instincts right now tell me that there's just something fishy about this, and we'll see. Technically, I can't say anything other than that the 10-minute ESU has pulled back from peak E. We'll see where that goes. That's the one I discussed a moment ago. It was without the technicals. With the technicals, we'll see. Okay, now a couple of things that I want you to do was to I want you to quickly go to TLT. The TLT is down $1.84. That's big, down $1.55, 1.55%, and 117.24. It does suggest that a whole bunch of testing in the 114.81 area might have to occur this week as it gets closer there. let me put it this way, towards that area. And the TBT, which is the opposite, the inversion of the TLT, over the weekend, I really thought, what could I count? This is that Chapman wave unconventional flat-based restart, and it really suggests that, yes, we could go a little higher, and even if we went to 52,920, which is start leg C, it would probably go a little higher than that, but then it would come right back to the 46s, if that is the pattern that we're looking at. And the weekly pattern so far on the TBT suggests that yields, in fact, could continue a little bit higher. So I got to respect that. Now, this is going to be very, well, first of all, I wanted to mention two things. Just observations, and it's got nothing to do with the market. Three things, actually. The one has everything to do with the market, but two of them don't. One is, I wanted to pay tribute to, he became a dear friend. He was my mentor when I was at the New Conservatory of Music in Boston. And I got my master's degree in clarinet performance. And Gunther Schuller was just really, for me, he was a mentor and a friend, and someone who really believed in what I was doing. And I have to thank him. And he passed away. So my son emailed me last night saying, hey, did you notice, did you see that Gunther Schuller passed away? 89 years old. I did not know that he was that old. And 89 years old, he was a figurehead here in the United States musically in every form. I remember that, I remember reading his name back in South Africa when I was a jazz fiend, and I got Ornette Coleman's Shape of Jazz to come, which was very influential to me anyway. And when I gave Gunther a ride home from concert where one of his pieces performed last year, my wife and I were in the car, and he was sitting at the back, and he said, oh, he was sitting next to me, that's right. So I turned to him and I said, I mentioned something about Ornette Coleman, and I don't remember how it came about, but it came about because as he was one of the great classical musicians, Gunther Schuller, he was also the first person to play horn, a jazz horn, and all sorts of things like that. And at the New Conservatory, he brought in the jazz department, I think must have been 68 or 69. I mentioned Ornette Coleman. I don't remember why at the time. And he said, oh, I just came back from visiting him, and we had a discussion about Ornette Coleman. Turns out, I think it was last week that Ornette Coleman, a fantastic saxophone player, passed away. And here we are, Sunday, Father's Day, Gunther Schuller passes away. It's going to be a loss here to the Boston area. I think many people will be grieving. He was very outspoken, so obviously that means he also had some people that were not friends, but there were many, many, many more people. They weren't just friends, but they were devotees. And so my tribute to Gunther Schuller. I will miss him dearly. And the other thing is, on the way back from Brooklyn, just by chance, we decided we'd go 95. It's a long way. But we thought, let's just stop at one of the coastal places. And we said, hey, let's go. My wife said, let's go to Madison. Madison? I said, Madison. So we went to Madison, Connecticut, and it was just lovely. And a beautiful little place on the way, on the water, and some beautiful homes on the water. It was really a treat, and we had a good time. Ate at a place, a bookstore, with a really nice little kind of a restaurant-ish, toasted sandwiches and stuff like that. And so, yeah, Madison, congrats to Madison. Nice, nice place. And then the third thing is, whenever I've been in Brooklyn for the last 10 years, looked at real estate in depth. Only reason why I personally did not buy in there about 7 or 8 years ago was I just felt I didn't want to be here in Boston doing repairs and all sorts of things I've done before here in the Boston area. And you just need to be on the spot. I mean, you need to be watching people. And yeah, you look back and you say, hey, you could have put up plastic. Nobody would have cared. But that wasn't the point. And the point is, at that time, I just didn't want to bother my kids with things that they were focused on their own careers. So, yeah, I think that real estate in the Brooklyn area is going to go in for a kind of glut of which we have not seen since the 1972-73 period. I love a lot of what's going on. I love the whole cleaning up of that walkway along the river, along the Roosevelt. It really is, well, this is on the other side, on the Brooklyn side. But they've done a great cleanup. I hope they're going to have enough money to finish all their big projects. But I do not like to see entire blocks. And if you know the Brooklyn block, it is a long walk. It's like Manhattan, a long walk, rectangle kind of walk. And then a shortish walk, not that short, but a shortish walk in comparison the other way. And they have taken almost entire blocks and bought up property and are renovating and redoing things. And all I can tell you is I've seen this before. I've seen it whether I was in South Africa, whether I've been in America. It always ends the same way, with a glut. And a glut in stocks, or a glut in stocks, or a glut in shoes, or a glut in whatever it is. The very word implies an excess. And we will head towards an excess within 6 to 8 months or a year. There's just no question in my mind that'll happen. Am I saying that there'll be a complete breakdown in the prices? I'm suggesting that history says yes, but that part of it is a guess, which rhymes with yes. But as to a glut, there's no question about it. At least seven major projects with hundreds of apartments. Oh, and many of them are apartments for rent. There are condos as well. So this is going to be very interesting. But the way it has cleaned up the city, which was really dilapidated. I mean, it might look groovy and all that, like Harvard Square was back in the early 70s. But at some point, what you get is prices so high that only the major stores, the really big stores, can move in. And when that happens, the whole character of the place changes completely from mom and pop to Gramps and Graham. I don't know what it changes, but it changes a lot. All right, so enough with that. But I am telling you that as sure as I'm sitting here right now, I'm seeing something that is quite extraordinary on the positive side, looking out to the future, looking out decades. I'm not talking about 5 years, 10 years. I'm talking about decades for the next generation. And at the same time, for those overpaying right now, and I can tell you overpaying, I've never heard of prices like this for the tiniest little things, even higher than in Manhattan, I'm told. There's a penalty to be paid. That's all. It's simple. All right. Back to our story, back to the market. What I'm looking for is in the TBT, if there's a break from 50.20 up $1.43, and it even gets close to 51.20s, you will see a test of 52.19 to make leg C, and then you will probably see a D, and then we're going to have to be very careful in the TBT, because at that point the TLT should have done all its testing of the 114s, the 200-period exponential moving average in the weekly charts, and then we'll see. Are you going to get another Japanization of our bond yields? But if housing and other things are starting to show improvement, is there a difference between the Japanization of our bond yields? Because in Japan, for 19 years, there wasn't. There was basically a kind of a deflationary aura around the whole complex financial market, as well as the economy. In our case, we've seen record highs in the market. So there's a really big difference, but we've not seen the growth in jobs. So is it all about jobs, or are we going to find out? So let me go to this. A couple of requests, but I can't actually remember anymore, so I'm going to go to the XLF. XLF made a peak D on Friday with a horrible decline, and really one of the ugliest declines in quite a while. But lo and behold, not only does it gap above Friday, it's looking like there could be a test of the high of 25.31. Just type that in so I don't have to keep saying it. But if for any reason between right now and tomorrow at this time, the XLF has given back a good chunk of the gains and is trading under $25, I don't care what the reason is. If it's trading under $25, it's going to hint very strongly that this could turn into a peak D in the weekly chart. So that's the way I'm looking at it. And the 120-minute chart has just made CDE. It's gone to a peak E, and now it's pulled back sharply. Was on Friday. So let's see, in the den, now I can read it. Manhattan, Brooklyn, real estate tied to Wall Street. If market is down, then real estate prices will follow. Absolutely, except there's sometimes a little delay. And we've actually seen that back in 2000, when the market pulled back so sharply, real estate pulled back and then went on to turn around and go to all-time highs, to the high of 2005, remember? So look at the HGX index. So in a sense, absolutely they tied, but at the same time, they have a certain independence at this particular point that says the momentum in real estate usually doesn't just end on a dime. It ends not with a whimper, but it ends with some kind of flurry to the upside, and we'll see how this is going to unfold. But when I'm looking at the HGX, it's made up, of course, of real estate throughout the country. It's made up of new real estate, all sorts of commercial, private, just the whole plethora of everything to do with real estate. So now I want to do a couple of things. We've got a couple of minutes before this next break. In this next break, I want to discuss the VIX index. The VIX index traded down to the 1246 level, 1346 level. I said the 13s should try to be good support. But if the 1250s, I'm sorry, I should say 1243 level. If the 1250s cannot hold the support, and by that I actually mean throughout the day. I don't mean that if it just breaks under it. I'm talking about really a closing basis. If on the close today, later on, there's some nervousness about what's going on, and the VIX starts to rally, that VIX will still be a very important component. As it is, it was reflecting some selling, not nearly as much as you would think. And then over the period of the day, because the Dow was holding to over plus 135, S&P was plus 16s, that suggested that the intensity of the continued holding of price would force the VIX lower, and that's exactly what it did. So that makes this even more important on the weekly chart, because the weekly chart has broken what would be normally a support level. But it's Monday, 2 hours into the 2.25 hours into the first trading day of the week. I want to see where it is on Thursday afternoon to Friday. Why? Because if the volatility index has gone below 1210 to a new low and closes somewhere there on Friday, we could start to see a move to the upside, which I was absolutely hoping would be much later on, in months, not hours. I was hoping that would occur sometime, maybe instead of the September-October lows, we'd be looking at a breakout to all-time highs that we haven't seen, a kind of breakout that really just blew away all the old tops, and you start to see the QQQ finally make it towards its all-time high. It's had let me just do this here, and I'll do the chart. I'll bring the chart up as soon as we get back. We're talking about 131, 120.03, I think it was. Yeah, 120.03, and it's at 110. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, we're back. Dow's giving, it's giving back a chunk. It's giving back, like 11 points or something. Started at 142. S&P still up there at plus 17. This is going to be a fascinating market for a number of reasons. Now, when I was talking about the QQQ series, look, 120.50 was the all-time high back in March of 2003. March of 2000, I meant to say. And we've made a high so far of 111.16. But that was 3 months ago. Last month was a lower high by just a fraction. So you go from 111.16 in April to 111.08, 5 cents lower in May. In the whole month, with the round number 106 lower, much higher than it was the previous month of 104.34. This month, we've made an even higher low bar so far. Month is not even close to being finished. And all you need to do is to go to 111.09, and that starts a continuation pattern of last month's high And if you go to 111.17, 111.17 is just 20-something cents from here in the QQQ series, and that whole QQQ 100 stocks, right? It's the NDX 100 trading vehicle. All you need is that to get your leg D in the weekly and the monthly chart. It becomes leg D in the weekly chart. And if it takes 2 days to do that in the daily chart, or even if it pulls back from here, you've got that previous peak E at 111.16. Oh, no, then it wouldn't have made that thing. That would indicate that we are very close to the lettering that says at D, from D on, you can start to make a turnaround even of consequence. So this is why it's very interesting at this particular point. Okay. Now, the MACD and stochastic in the weekly chart is still quite weak. The on-balance volume made a low. Wait a minute. The on-balance volume goes to a low, a 2015 low, way lower than it was back in 2014 in December when it hit, on-balance volume, hit 1.688. 498.906.00. That was just a joke because I don't know how you could ever figure that out. 1 trillion point 68, let's call it. And now you're trading at a low that was made the week of the 19th of June, and the on-balance volume was at 728.11. So that is huge, big difference. So all I can say is, there are many signs to show that there are many signs of internal weakness. But at this particular point, if price is moving higher, I've got to respect the price just for now. But believe me, I got my eyes on shorts because I think there are going to be a plethora of shorts coming up in the next 2-3 days. I don't see how this can resolve. The best that it can resolve is with a delay and some partial, Russia or somebody coming in for a partial payment. But there's no way that Greece is paying it all. And that's going to create yet another problem. So it's just push it down the road, kick the can down the road. And Apple is acting okay. Question about it's up $1.44. It's just in a trading band. And there's that same pattern of the double U formation, 2 cups. So I'm watching it closely. And my eye suggests that Apple, in fact, is more making an arch than a cup formation. So we'll see. Okay, let me just run the numbers again. We'll do the VIX index because that's going to be critical. If the VIX index turns from here, it's at 1266, closes anywhere in the 13s or higher, 1310, 1320, or makes a new a new high of the day above 1346, this market will pull back very sharply, and we might just have seen the high for the week. All right, I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.